In this video, we're going to explain why Bitcoin and the crypto ecosystem have been dropping in the past few hours. But first, it's crucial to understand what's happening on the Nikkei, S&P 500 and Nasdaq charts. Regarding the Nikkei, we're looking at its daily time frame. Remember that Nikkei is the Japanese index that has impacted the global economy, much like the crypto ecosystem did not too long ago. We had already discussed its quick and rapid recovery, highlighting how positive and beneficial this event is. Now, we've identified where the structure lies, the key level that the price once broke, creating a black swan event. Currently, we're revisiting that structure, and it's normal to expect some reaction in the price. Something very similar is happening on the Nasdaq chart in the American Tech Index, where after a significant price drop and a rapid recovery, you can see how they've reached a key level. Just look at how the price is interacting with this area, and notice how it's now at those key levels, reacting as expected. Going back to the Nikkei and shifting to the 1 hour time frame, you can see we're working on analyzing a macro wedge to see if, as this wedge gets tighter, it will impact and test the key structure. We'll see if this structure and compression eventually lead to a collapse. This is very similar to what you'll soon see with SHIB, something we've been anticipating. In fact, while we're recording this video, it's already happening. Those wedges in Bitcoin, Ethereum, and the rest of the altcoins are already collapsing on slightly lower time frames. This is exactly what we're analyzing at a macro level for the traditional ecosystem. Certainly, in the S&P 500, we don't have a structure where we see the price collapsing, but that's the magic of cross-analysis. Nasdaq provides us with the information that, in a way, we're demanding from the S&P 500. However, we're also tracking that wedge, which is getting smaller and smaller, thanks to cross-analysis and understanding that both Nikkei and the S&P 500 are now hitting key zones. We can assume that the S&P 500 is in a similar situation. That's why we're also focusing on that wedge, which is getting tighter. Wow, today has clearly been a day of shorts, and this is where we pose the question: are we going to experience a period of shorts in the medium term for both the traditional market and cryptocurrencies? For something like this to happen, a lot of things need to occur, which we'll explain to you shortly. Ultimately, Nasdaq, like Nikkei, is hitting a key structure. It's getting tighter and tighter, and we'll see if it collapses aggressively at some point. This collapse could easily reach a similar structure, giving us a signal that we might consider being bearish in the short to medium term. However, if we look at the long term, we're still optimistic because this macro defense zone in the traditional market hasn't been broken. Of course, we don't have a crystal ball and can't predict if the wedge will break. That's why we don't assume it will definitely break. Instead, we'll just wait and see if the break occurs. In that case, we already have an action plan. If not, the wedge will likely continue to rise. Notice that we're dealing with a broad time frame. Today's session was pretty clear. By cross-referencing with Nikkei, the S&P 500 and Nasdaq, and now with Bitcoin, Ethereum, and other altcoins, we can see that the opportunity is leaning towards shorts. So, the million-dollar question is, what now?
Let's look at the crypto market. On screen, we have Bitcoin in the 4 hour time frame. We can see that after this strong upward move, we've entered a downward channel where we recently experienced a bear trap that gave us a strong push, bringing us to the middle of the channel. Now, let's zoom in a bit and switch to the 1 hour time frame to take a closer look at what's happening. After the downward move, the price formed a micro accumulation process followed by a bullish reaction, and at the same time, we saw how they defended it. So, what does this tell us? After the accumulation, they're defending the price in this zone. We also have a bullish push, a pause, and we're waiting for a repeat of this bullish move, which could potentially take us to the top of the channel, or at the very least, we're expecting a reaction at the midline. Therefore, we remain optimistic. We're optimistic about the crypto ecosystem because we expect the price to develop. It might create a trap below this defense zone, only to then seek out the repeat move we mentioned earlier. So, however, if we zoom in even more down to the 15-minute time frame, we can see that Bitcoin is forming this structure, which we'll later see more clearly in Ethereum. This structure is a micro distribution process, which previously gave us a small trap, re-entered, and broke out with force. After that forceful breakout, we see how it's forming a wedge. This wedge came to hit this exact trend line. In other words, it revisited the origin of the breakout. So this drop we're experiencing right now was to be expected. This drop gives us a strong wedge breakout. So in Bitcoin, we're going to pay very close attention to this defense zone. We'll observe how the price reacts to these levels during this drop, as we expect a clear reaction in this zone. However, we know it might create a bear trap, and that trap could provide us with a good entry point to anticipate a price rebound. That said, we'll always keep an eye on the traditional market, knowing that we're in these wedges. If we see a strong breakout with a pullback in the traditional market, we might expect that both Bitcoin and the rest of the system could give us more than just a trap and instead move towards other levels, such as the base of the channel. On screen now is the Ethereum chart in the 1-hour time frame. Here we have this slightly more macro structure, which we've been evaluating for a couple of weeks. It's an upward accumulation process where after the drop, we were able to anchor the creep. At the same time, we have a slightly more micro accumulation process, which pushed the price upwards and defines a defense zone that continues to be respected. Notice how the price doesn't move past the zone. We also see this structure, similar to what we analyzed in Bitcoin. A few days ago, it signaled a future downward breakout, and it did so with strength, only to come back and confirm that trend line. Zooming in further to the 15-minute time frame, we see how after confirming the trend line and therefore revisiting the origin of the breakout, the price reacted as we expected. It's pulling back now. The next thing to watch is the reaction in the defense zone. So as we've said, we'll be watching how the price reacts in this zone because as long as the defense zone holds, we'll remain optimistic. But you know how much we like traps. So if we see a trap below the defense zone, we know we're dealing with areas we consider highly valuable for targeting that upward move. Always remember that we need to manage risk, so we have to set a stop loss. If the price doesn't react as we expect, we'll minimize losses while also considering the potential gain from this entire upward move. Now let's analyze the altcoins, but before that...
Welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
We have Cardano on the screen. Let's recall that we're coming from an upward impulse and then worked through a corrective downward pattern where we had the W, the Y, and now we're moving through the Z, which has given us this trend line in the form of a creek. This creek is where we're evaluating an upward accumulation. Just like with the other assets, we experienced a micro accumulation zone, and then the price was defended in the defense zone we've marked here. So this means that all these buyers are defending their positions. We're expecting this to continue. Therefore, we'll be watching for the price to react again at the defense zone, and if it gives us a bear trap, we already know we're in buying zones, waiting for the upward impulse afterward. And when analyzing this coin, we can't ignore the rest of the assets. As we know, we'll always look at the entire ecosystem together, doing cross-analysis. This means that if we see the wedge in the traditional market break, and at the same time, we have a loss in the defense zone in Bitcoin, we'll be more cautious here as well. As for Solana, looking at the 1-hour time frame, it also gives us a micro upward accumulation process, which is then defended in a defense zone, but at the same time, we have a micro distribution process here. In other words, we have sellers here. These sellers are drawing a supply line that they don't let us cross. So in Solana, even though we're bullish and waiting for this supply line to break at some point with strength, we can still expect these types of movements. And here, just like with the other assets, we know that any area below the defense zone is a good buying zone. Moving on to DOT, and also looking at it in the 1-hour time frame, we see a similar story. We have a strong drop, a micro accumulation that pushes the price upward, and then a defense zone. At this very moment, the defense zone is at its limit. We'll have to watch closely to see how it develops, because if it turns around now, it's fine and we can expect the trap later. Or we might be experiencing the trap right now, which we then expect to give us the upward impulse. Remember that we will soon launch our private Telegram channel for our English-speaking community, where we will conduct live technical analysis daily, looking for trading opportunities. This channel will be available very, very soon. To access this private channel, which is already a great success within our Spanish-speaking community, one of the requirements will be to be a user of Bitunix with our referral code. This exchange is accessible from anywhere in the world without a VPN, including the United States, and KYC is not required. Its trading panel is highly competitive and comprehensive, and the assets and market liquidity on this exchange are exactly what we all see. So get ahead of the game for when we open slots for our private Telegram channel for our English community. Open an account with Bitunix now. We will leave the referral link in the description and pinned comment of this video.
That said, if you enjoyed our advanced technical analysis, let me know in the comments. Also, give the video a like, subscribe to the channel, and click the bell so YouTube notifies you of future posts. Good luck with your trading and see you next time.